Hey traders, this is Ron Haight at Market Tamer. Happy Monday, happy post-Cinco de Mayo. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. All right, I forgot to tell you guys I was on vacation this week, and I am so sorry. So I was actually gone late last week, and this week I got some emails saying, hey, where are the videos? So I'm in Fort Lauderdale on vacation. You might hear some birds chirping or waves in the background, but I do apologize. So I'm going to put a quick video together today because the market is moving, and then I'll be back with the normal videos on Wednesday when I'm back home. Okay, so S&P is down 35 points roughly, and this video is about just a few minutes after 10 a.m. Eastern. The YMs, which are the Dow futures, down about 300. So a little bit of a pullback. If I zoom in here and we start with the S&P, you can see we're down $3. We were below the 20-day EMA in red, and that's sort of a litmus test over, it's a 20-day outlook. That's 1 month worth of time, 20 trading days. Where I would get concerned is the 50-day, because if we go back and we look at the last time we broke the 50, that led to a big decline. I just want to say this. If you think back to October and then the November, well, really it's the December massacre. I was telling you guys in the videos, the news during this decline did not change, and then boom, we go right back up in record time. Well, now they're trying to hit the market with, oh, the trade wars again, blah, blah, blah. Just like they did over here. This is when they were, hammering Apple and Netflix and saying all that bad stuff too, and oh, lo and behold, everything's right back up. So my bullishness remains long-term, but just be careful on listening to those yo-yos on TV, and everybody needs to have an opinion so they can say they were right. And I don't really care about opinion. I prefer to trade what I see. And while I am long-term bullish, when we break the 50-day, even though to me this was complete BS, complete baloney, the charts did not lie and the bears had the edge. Well, once we got back above the 50, I would say that again, that puts the odds in the bulls camp, and the 50 is the orange line, the institutional moving average, and then we go right back up. So if we get below it, that's where I would get concerned. So am I really worried about the headlines today? Absolutely not. No, it just makes me laugh because that's exactly what they did to make people sell so they could come in and then buy stocks and push them right back up in stunning fashion. Now here on the Dow, if I zoom in, we're well below the 20-day in red. We bounced off the 50-day. We get below that 50-day before I get back on Wednesday. Then the bulls lost their edge, target 200-day. So if I go back to the spiders, we get below the 50-day, what's the target? There's a lot of ledge action here, or high, high, low, 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 right around 280. If we break the 285 area, which is the 50-day on the SPY, 280 and then 275. If I go to the Qs, it's at about almost 1.5%, holding up quite well. They're even above their 20-day. So below the 20-day, we go 50. Below 50, we go 200. We go to the Russell 2000. They actually broke out on Friday, the 3rd, which is a shame because if I would have done the weekend video on Sunday, I would have said, hey, wow, this really looks interesting. Targets up here. Now, miraculously over the weekend, now they're pushing the whole trade war issue. And I read an article in Zero Hedge that says China's still coming for the summit. So, it's just a lot of posturing, I think. But the IWM is still back into this little trading range. So technically, IWM is the most bullish of the majors, considering it was lagging, because it's still above all of its major moving averages. All right, really quickly, let's just run through a couple big stocks. Amazon, watch the 20-day EMA. Below there, that's what would open the door down to maybe the 50-day. If I go to Apple, it was down pretty decent today. It's still down $4, about 2%, but it held the red line, just like it did here on a closing basis, essentially, and it also did here. If it breaks the red line on a closing basis, then the 200-day in purple and the 50-day in orange, those institutional MAs around 190, that coagulation, that confluence, that would be the next target. If you look at Netflix, it's still just hanging out in here. Overall, it's bullish. And I got some questions on Tesla. Remember, once we broke down here, that was a bad sign. It's trying to rally. So far, it can't even get above its 20-day EMA. So I'm going to leave you there. I'll be back on Wednesday with a video. Wish you guys all the best, and I'll catch up with the emails and the questions posted to the video or email at that point. Have a fantastic week. See you soon.